everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. Today we're going to talk about the importance of having an exit strategy, particularly having a stop loss strategy. What could it be? What should it look like? What can it look like to get out of a trade at minimal to no loss? But before we do that, as always, we're going to smash that like button. That does help get this channel out to more people and does also help support the channel. I do appreciate all those who write the kind and encouraging words that you do. You take the time to write them. I take the time to read them. Those of you who asked questions in the comment section, I do get back to those as soon as I am able to. However, for those of you who'd like more immediate engagement, you can find me in the Discord. See below in the description. You might need to click the more button. That will drop down and you'll have some Discord options there for signing up. And I'm in there engaging with such wonderful communities, as well as giving insight, resources, some of education, some of my trade setups, and of course entertainment, because it's not financial advice, nor am I a financial advisor. This is for education and entertainment purposes only. Are you not entertained? Okay, so let's jump into the different stop loss strategies that I look to use. And firstly, it's important to have a strategy. Number one, never rely on anybody else's entries or exits. There can be guidance. I always go by the saying that I like to eat the meat and spit out the bones. When I listen to somebody, when I'm being educated, when I'm learning, I take what I like, what I feel is good, and the rest I can kind of discard out there. At the end of the day, only you are responsible for your trades and nobody else. At the same time, it can be helpful to having a mentor or a guide to give such guidance of key support and resistance levels and so forth. But ultimately, you're responsible for your trades and having a strategy, okay? Now, the strategy is important both to the upside for taking profits and to the downside for getting out of positions when you feel you want to or need to get out of positions. And so there are a couple of stop loss strategies that I use. Number one is by controlling your position size. For example, if I have a fairly small position size, I might not have a very aggressive stop loss. Mostly, I don't like using stop losses set by the system. I like being the stop loss. I like to manually watch and stop out of trades. Of course, you say, well, you've got to sleep sometime. Yes, I do. And so I will at times set stop losses for when I sleep or when I'm away from the trading desk. I have other things to look at. But also, if you have a position size that is quite small enough, then also if you have conviction in tokens, this is why I tend to trade the stronger tokens and why I have also a little bit of a different rules for different tokens as well. But I think the key thing here, first and foremost, is to have a strategy. When you enter a trade, know when you're going to exit to the downside and to the upside. Because you can have a stop loss while you're in profit. If I go to bed and I'm up in profit in a trade, I don't want to wake up and I'm now in loss. So I might set a stop loss to stop me out in profit. Again, generally, I like to have those manual stop losses. And if I'm in profit and I start to see that profit eaten up, generally at a certain level, I will stop out of that trade in profit. So stop losses don't have to be in losses, like losses monetary wise, but of course stop losses can be like you lost some profit and you don't want to lose any more profit, okay? So it's important to understand that. So let's have a look at a couple of charts right now. This one here for Sui, a couple of things that have been identified as number one. There was a trade on Sui at $4.11 that I got out of. And so this is the other trading strategy that I will show you. So number one is you control it by position size. That means if I'm in $100 in a trade, unless that $100 means the world to me and I'm dependent upon it to feed my family or put gas in my car, I may not put a stop loss, a system stop loss on that trade. That might be something I manually stop out at some point because my stop loss is my position size. So number one, stop loss can be by position size. And of course, if you have a position size that's small, if you have belief in the project, you can also dollar cost average down. So let's just say, for example, I got in at $4.11 at $100, and I'm like, oh, that's okay. Then I added another at $100 at $3.83, and then another slapped in another $100 at $3.59. My position size is still small to me personally, that I'm not worried about this. If this coin was to go into a bear market, I've got $300 that I'm holding of Sui that I'm holding in the bear market, but this is a multi-cycle coin that I have conviction on, so I'm not going to be concerned about that, okay? I'll just hold it through the bear market for a year, and then we're back into another bull, and it eventually will pop up, okay? So that's, but at some point as well, if we start going into a bear market, it just keeps dropping and dropping. At some point, I'm not going to be buying all these levels. The next level, if I was in 1, 2, 3 here, the next level I'd look at buying is $3 level, and then down at $2.55. And then if we were to completely capitulate and lose that level, then I would reassess and maybe stop buying and saying maybe we're in a bear market, we're just going to ride this out. But at most there, I might have $400 now, $500 in the play. My average position would have come down significantly now, and I've managed the position, I've managed the risk, that's my stop loss. And at some point I might just say, hey, you know what, if we were to lose this level, I might cut these trades. I might cut these trades completely because I feel we're going down to here, and I can add there as well. So that's what I mean by controlling by position size, and then I may stop loss out manually there at that point. Now, if I just enter my first trade here, well, then I may look and put my second trade here and my third trade here, for example, if needed. So that's more of a dollar cost average, control the trade by position size, and then I manually stop out if I think things in the market or the market structure have changed. The second way to stop out is buy the most allowed loss that you're prepared to lose on the trade. So people often ask and say, where's the stop loss you're going to set? Well, I don't set a specific number for anybody, because at the end of the day, I don't know how much money you've got in the trade. I don't know how much money that means to you. What I'm prepared to lose may be different than what you're prepared to lose. So in theory, I will say to people, look, first of all, I control the trade, the stop loss by position size with a bit of a dollar cost average, building a position, not going in too heavy there on the trade. And then, basically you can make some upside as it rebounds, because if you have conviction of the trade, there's nothing worse than getting stopped out and then seeing your position jump back up, because I don't want to be stop loss hunted, okay? This is a bit of a stop loss hunt there this week. Imagine if you got stopped off there and then you missed out on all these gains to the upside from about $3.48 all the way up to $4.25. However, if you manage your position size, you're not going to get stopped out there, and then you will enjoy the gains to the upside. And so having big positions when you're going in on trades isn't always the best thing. But if you do go in with big positions, obviously having a stop loss strategy is really important. So number two, at the most, you're willing to lose on the trade. So for some people, if a stop loss might be under this wick here, that it's sitting at around $3.49, I guess there, okay, for the low on. So there's $3.49 on that trade. Now you might say, oh, I'm going to set my stop loss at $3.48. So if we create a lower low on the daily time frame, that we're going to stop out at that trade and take the loss. But you've got to calculate what that loss is and say, are you prepared to lose that much on the trade? And if not, you might set your stop loss more aggressively. And yes, that might mean that you get stopped out more often, but it also means that you don't take big losses, especially if it comes down and then it just keeps going all the way down to the 200 EMA on the daily down there at $3. Now, I don't usually use this strategy. Okay, sometimes I do, and sometimes I don't. Again, every trade is different, and each rule that I apply is dependent upon the market, is upon the coin that I'm trading, and how much money is in the trade. That's when people ask me, I'll ask, well, how much is the position size, and what was your entry on it, and what does that money mean to you? What percentage of it is of your portfolio? You have to include all those very, very important details. So now my third stop loss strategy is getting out around break even. And this one I've employed fantastically many, many, many times. And so how this works is I will look at this and say, right, my line in the sand here is $3.59 for the Sui trade. That's the Fibonacci level. Before it was up at $3.83. We're going to put a trend line there. That's where that is at the moment. Of course, that's going to move, but I want to be able to see this so that we can see that level there. Okay, so that's that level at $3.83, and then we've got one there at $3.89. Now we're going to go down to the 15-minute chart and have a look at these levels. Now, you can either do this on the 15-minute chart or on the 5-minute chart. I kind of prefer the 5-minute chart, but that's just me. And we're going to kind of zoom this price action in and see how this can work. So what we've seen here is we see, let's talk about the $4.11, how I got out of the $4.11 trade. Now it came down. Most people might have put a stop loss here, and then it comes down further and they go, oh, great. And then it comes all the way back up and retest. That's where I got out there on the rejection there on the retest. Now you can do this on the 5-minute or the 15-minute. Now people might say, well, what if it doesn't come back to retest? Well, that's the risk that you have to, that's the risk that you take as a risk manager, as a trader. That's the risk that you take. And so I'll take the risk and say, okay, I've been trading these coins long enough to know that generally speaking, unless there is some kind of like flash crash, they always come back and retest, fairly quickly. Now this one took a few hours. This one took 2 hours to retest. And so you have to be patient to wait for it to retest. It retests it. There's a little bit of a fake out. Then there is a rejection here. And at that point, I get out of the trade at no loss. Okay. Now, what does that save me? It saves me because we go all the way down here. So let's look at this next scenario. Okay. We initially found support, get in the trade here at $3.89. Again, what do we see? Coming back down. And we break down, and if we actually look in the 5-minute time frame, we'll actually find, this is why I like the 5-minute time frame, because you'll actually see the retest on the 5-minute time frame. Okay, and so you have a retest here. It fails the retest, gets rejection, and goes down to this $3.83 level. And again, you can see multiple retests and opportunities to get out of the trade. In fact, you could have gotten out of the trade down there. You could have even got out of the trade again. If you go, oh, I missed getting out of the trade, even as you came down here for the first time, it got through. And that's why you don't want to necessarily jump out of the trade too quick, because then you can take quick profit to the upside there. But of course, as we came down and then we retested and we failed, we retested and we failed and went to the downside for $3.83. So you can see here, you even had another opportunity to get out of the trade. And then as we go down now, we've got the situation here at $3.59. Where would you get back in the trade? You can get back in the trade on a retest and a hold of this level. So I'd wait for this candle to come back, retest this level here, and if it holds the support, I can stay in it. Now, in a choppy market, if it just is going like this, then I'm getting in at support and then I'm getting out at where I entered and vice versa. And it's just time consuming, and sometimes I just stay out of the market and wait for the market to pick a direction and say, okay, is this going to hold as support? Another place you can get in to the upside for confirmation is here. You can see the 20 EMA on the 5-minute time frame is at $3.62. You can also go to the 15-minute time frame and see that it's at $3.66. So you can trade off the moving averages or the EMAs, but also off the Fibonacci's. And so that's the way that I recommend for having stop losses set, is that those are the stop losses strategy. Now, of course, again, the question is, what if it falls to the downside and then doesn't come back up? Well, firstly, we'd probably be in a bear market, number one, or number two, you might be in a really crappy coin that you've traded. So I wouldn't really recommend this for certain coins. I think you can do this with the stronger coins, not so much the weaker coins. So the Bitcoins, the Solanas, the Suis, these are trades that I would do this kind of trading on. However, I wouldn't recommend it because it could just keep going and then it goes to zero and you're waiting for the retest that never comes. But even those coins that may have struggled a little bit, often there will always be an area where they retest and they give you an opportunity to get out of the trade before a final capitulation. It's kind of called a dead cat bounce, and you get that dead cat bounce up and then you can get out of the trade, okay? So that's basically how that works. So the 3 stop losses that I use is I control the risk by the position size, okay? And so Number two is obviously you have a stop loss set at what is the most you're willing to lose on that trade. And then stop loss strategy number three is looking to get out at or close to entry on the retest. You have to choose the one that works for you. If you don't feel comfortable waiting 2 hours for a retest, and listen, if there is a big correction in the cycle and we go down and sideways, because last bull run, mid-April, the market capitulated in 2021 and didn't bounce back until July. So you got April to May, May to June, June to July, and you might not get your retest until July. That's 3 months later, okay? And so these are the things you have to assess, and this is why I use all of these stop loss strategies all at different times for different reasons for different coins. But ultimately, you have to choose the one that works for you. If you can't stomach waiting for the retest, and I would say that most of the time, except for major corrections, the retests happen fairly quickly. And even for major correction, usually there's that wick down, up, and then a further rejection before capitulating down. You see this all the time here. We come down. Look what happened here. We jumped up. We rejected before we came back down again. So if you had entered here, you had to wait to get the retest back to here, okay? And that can happen. And I'm looking here on the daily time frame. I would say as we break this down to the 15-minute, that there would have been retests, and I've shown you retests on this coin that happened. There you go. You get that retest before, so you go, oh no, we're going down, retest before capitulating to the downside. So that was your opportunity to get out of the trade at break even. And that's why I'm able to stop out of so many trades at break even or close to. However, there are some trades that I stop out and lost, but I like to manually stop out of those at my acceptable level that I'm willing to take the loss. And sometimes I lose hope in the trade and I just cut the loss and roll it into a different trade. And I make that back up by rolling into a stronger token, a stronger trade with stronger technicals there. And of course, the other one is managing the position size, okay? So that is the stop loss strategy that I use. 3 different strategies used in all kinds of different ways. I don't just stick to one, and all for different coins as well that I'm trading, and dependent upon the market conditions, where we're in the cycle. All of that has to be factored in. So while I have rules, I apply them and differently in different situations to different coins. I think the most important thing is to have that extra strategy to the downside, that if the trade goes against you, and of course this can be the same thing if I am in profit on a trade. Let's just say that a coin went up and I got into the coin on profit, and now it's coming down. I'm still in profit here, and I wait for the retest and I can reject there. Then I get out in profit on that trade. So stop losses can be employed to stop you losing profit, but also can stop you from losing that original capital that you put in the trade as well. I want to hear your thoughts on your stop loss strategy and how you navigate your exit strategies there. And until the next episode, happy trading.